Imagine waking up tomorrow morning, opening your investment app, and realizing that one company in your portfolio is quietly shaping the future of artificial intelligence, cloud computing, business software, and perhaps the next trillion-dollar opportunity. That company is Microsoft. For decades, Microsoft has been known as the company behind Windows and Office, but today, it is transformed into something much bigger. It's one of the world's most profitable businesses, a global technology powerhouse, and one of the biggest players in the AI revolution. But here's the question every Microsoft shareholder should be asking. Is the company's best chapter still ahead? Or has the market already priced in all the excitement? Because over the next few years, Microsoft's decisions could shape not only the future of technology, but also the future of millions of investors around the world. So before you decide to buy, hold, or even sell your Microsoft shares, there are a few things you absolutely need to understand. Let's begin. When most people hear the word Microsoft, they immediately think about Windows, maybe Microsoft Word, Excel, or PowerPoint. But those products are only a small part of a much larger story. Today's Microsoft is more like an entire technology ecosystem. Every single day, millions of businesses rely on Microsoft software to operate. Thousands of companies store their data using Microsoft's cloud platform, Azure. Professionals collaborate through Microsoft Teams. Developers build applications using Microsoft's AI tools. Gamers spend billions of hours inside the Xbox ecosystem. And corporations across nearly every industry depend on Microsoft's cybersecurity solutions to protect their digital infrastructure. This isn't just a software company anymore. It's one of the most diversified technology businesses on the planet. And that's exactly what makes Microsoft so interesting for long-term investors. Then, something happened that changed the entire technology industry. Artificial intelligence exploded into the mainstream, almost overnight. Every major technology company began talking about AI. Investors became excited. Headlines appeared everywhere. Stock prices moved dramatically. But while many companies were still announcing their AI plans, Microsoft was already taking action. Instead of waiting, the company invested billions of dollars into AI infrastructure, strategic partnerships, and the computing power required to support the next generation of intelligent software. It wasn't just another business decision. It was one of the boldest technology investments in recent history. Here's something many investors don't fully appreciate. Artificial intelligence isn't just about creating a smarter chatbot. Behind every AI response, every generated image, every line of AI written code, there are enormous data centers working around the clock. Thousands of powerful chips, millions of dollars worth of electricity, and an infrastructure so expensive that only a handful of companies on Earth can actually afford to build it. Microsoft understood this before almost everyone else. Instead of waiting for demand to explode, it started investing billions of dollars into AI infrastructure. New data centers, more cloud capacity, advanced AI hardware, and partnerships designed to secure its position for years to come. It wasn't just spending money. It was building the foundation of tomorrow's digital economy. But that strategy also comes with a very important question. Can Microsoft earn enough money to justify spending so much today? When people invest in Microsoft, they often focus on Windows, or maybe the latest AI headlines. But the real engine behind Microsoft's success is something much less exciting: recurring revenue. Every month, millions of businesses renew Microsoft 365 subscriptions. Companies continue paying for Azure cloud services. Governments renew long-term software contracts. Enterprise customers rely on Microsoft's cybersecurity products. This creates something investors absolutely love: predictable cash flow. Instead of hoping customers return, Microsoft already knows that millions of them will. That's one reason why the company consistently generates enormous amounts of cash. And cash gives Microsoft something many competitors don't have: the freedom to keep investing while others are forced to slow down. But here's where the story becomes even more interesting. Artificial intelligence isn't a product. It's becoming part of almost every product Microsoft already sells. Imagine opening Word, and AI writes your first draft. Opening Excel, and AI analyzes your entire spreadsheet in seconds. Joining a Teams meeting, and AI automatically creates notes, summaries, and action items. Suddenly, artificial intelligence isn't something customers buy separately. It becomes another reason to keep paying for Microsoft's existing services. That's a powerful business model. Because instead of convincing people to buy something completely new, Microsoft simply makes the products they already use more valuable. And when customers receive more value, they're usually willing to stay longer. And sometimes, pay even more. So, everything sounds almost perfect. A profitable business, massive cash flow, and a leading position in artificial intelligence. But if that's true, then why are some professional investors still worried about Microsoft stock? The answer has nothing to do with the company itself, so far. Microsoft's story sounds almost impossible to criticize. A company with billions in cash, a dominant cloud business, a leading position in artificial intelligence, and millions of loyal customers around the world. But here's something experienced investors understand. A great company doesn't always make a great investment. Those are two completely different things. Because investing isn't just about buying amazing businesses. It's about buying them at the right price. Imagine walking into a dealership. You see the perfect car. Reliable, beautiful, fuel efficient. Everyone agrees it's an incredible vehicle. But then the salesperson tells you it costs 3 times more than it's actually worth. Suddenly, it doesn't feel like such a great deal anymore. The same idea applies to stocks. Microsoft may be one of the strongest companies in the world, but investors still have to ask one simple question. Is today's price justified by tomorrow's growth? Here's one of the biggest mistakes beginner investors make. They buy a stock simply because the company has done well in the past. But the stock market doesn't reward yesterday. It rewards tomorrow. Every single share of Microsoft already reflects what millions of investors believe the future might look like. Faster AI growth, bigger cloud revenue, higher profits, new products. It's all built into today's expectations. That's why earnings reports matter so much. Microsoft doesn't just need to grow. It has to grow fast enough to meet or exceed what investors already expect. Because when expectations become too high, even great results can disappoint the market. But no investment, no matter how successful, is completely risk-free. Microsoft's biggest challenge may not come from weak products or falling revenue. It could come from competition. Every major technology company, Amazon, Google, Meta, Apple, Nvidia, is investing billions into artificial intelligence. This isn't a race where one company wins and everyone else disappears. It's a race where staying ahead becomes more expensive every single year. Microsoft must continue investing, innovating, and adapting. Because in technology, standing still is the fastest way to fall behind. So, Microsoft has incredible strengths. It also faces real challenges. But here's the question that actually matters. If you already own Microsoft stock, what should you do next? Buy more? Hold? Or take profits? The answer isn't as obvious as you might think. So, is Microsoft a perfect investment? No. No company is. Every investment carries risk. Competition changes. Technology evolves. Markets overreact. And sometimes, even great companies go through difficult periods. But Microsoft has built something that very few businesses ever achieve. A diversified ecosystem, strong cash generation, global customer trust, and a leadership position in one of the most important technological shifts of our generation. Whether that's enough to justify today's valuation is a decision every investor must make for themselves. But one thing is certain, Microsoft's story is far from over. Whether you own Microsoft stock or you're thinking about investing, remember this: your greatest investment isn't a stock, it's your financial knowledge. If you enjoyed this video, subscribe for more smart investing insights. Thanks for watching, and I'll see you in the next one.